So I
Yeah.
wanted to hear about your mindset now. Then we'll go into our hospitality asset class after that.
Sure, sure. So that is it. The mindset is that you got to be a lifelong learner, and
100%.
because when you're learning, you're growing, and when you're growing, you're hopefully making a difference, right? And that
Mhm.
difference is not just within you and your family, but also hopefully in whoever you're interacting with, and that is very, very important. And so that's what it is. I mean, with learning about the hospitality business, now what we're doing is I'm the hospitality division leader for KW Commercial, where I'm at right now on the brokerage side. Well, there we are doing masterminds. We're doing these deep dive courses in the hospitality world, where now we're teaching this to other agents, so the other agents can hopefully learn and apply this skill set, into their world. And so that comes with the passion of just education and the passion of serving and teaching.
Good morning, everyone. I am back with another awesome guest today. My name is Vinki Loomba. I'm the real estate investor and fund manager. And on this show, we go beyond the basics to uncover real strategies, real stories, and real opportunities to help you build wealth to real estate investing. And today, I have a really good friend of mine, Rav Singh. Welcome, Rav Singh, to the show.
Thank you so much, Vicky.
So, a little bit about Rav. Rav is a co founder of Spur Equity and veteran commercial real estate broker specializing in hotel sales and real estate syndications across North America. He holds the respected CCIM certification and leads the National Hospitality Division at KW Commercial, helping investors build passive income and generational wealth through smart tax advantage investments. So, welcome to the show again, Rav. And today we'll be discussing how hospitality and syndication build wealth at scale. Interesting topic. We all know syndication is a powerful way for investors to pool capital and access large scale real estate deals that you have couldn't taken on your own. So when applied to hotels, syndication opens the door to high reward opportunities in a niche asset class with strong cash flow potential and unique operational upside. In this episode, we'll talk about how investing in hotels through syndication can help you grow wealth over time and scale your real estate portfolio. So welcome again, once again. I'm going to ask this question, or I should say, I'm going to start with this question. What makes hotels an attractive asset class for syndication versus multifamily or industrial or any other class? And how does it work in hotel space compared to other asset classes?
Sure. Well, first of all, thank you for having me. It's a pleasure to be here. Hospitality is a very different asset class. A lot of folks don't understand the hospitality business, because when you're thinking about syndicating a hospitality business, you're not just buying real estate. You're actually buying a business that's disguised as real estate. And so what that means is that, unlike multifamily, where you're going after an NOI, which is pretty much very predictable, very capped, because most multifamily leases are 1 year leases. So once you sign a lease, you're stuck in that lease. On the other hand, in hospitality business, it depends upon what's happening around you, and so you can essentially grow that average daily rate day by day based on what's happening in the area, what's happening in your market, what's happening in your submarket. And so I really feel that it's a very dynamic asset class, where truly a good management company or a good manager can move that needle much faster than what you can in the multifamily world.
Hmm. So let's start with your journey.
Mhm.
I'm really interested to find out how you got started in hotels. I know I just started the conversation with the hotels because that's what you're doing right now,
Right.
but I wanted to go way back,
Yeah.
how you got started in syndications.
Sure, sure. Thank you. So Vinky, about it really starts from my brokerage world. About 20 years ago, I entered into the brokerage world all because I wanted to flip houses, and I was learning about real estate through TV. People were flipping houses, a lot of TV shows that were coming out there. So I got my license. I wanted to buy houses essentially. Commercial real estate was not even in my in my screen, in my radar. I put a lot of properties under contract, but before I could close it, I was having competitors coming from California and other parts of the world paying all cash and beating me to the sales. But what happened was I got my real estate license. Coming from India, I grew up in a traditional cultural environment where your folks said that education is the foundation of everything, right? And so that got beaten up into me. I was just, and I wanted to apply that same principle to the real estate side. So I went to school and I got the real estate degree, right? I went in there and I got that just to understand the foundations of real estate. But the application wasn't there yet, right? I was not getting successful in buying and selling houses. A friend of mine called me 2 weeks after I had my license, and he basically said, "Look, I have a gas station. Can you sell a gas station?" And I accidentally said, "Of course, I can sell a gas station." And then I met him over the weekend. And I remember the conversation, it was 20 years ago. Basically, he said, "Look, I have a gas station. I heard, you have a real estate license." I'm like, "Yeah, I got my real estate license, but I'm only in it for the last 2 weeks. I haven't done anything yet." And basically, long story short, he gave me the listing, right? He gave me the
Right.
listing. I got the listing. That's how I entered into commercial real estate second week doing after I got my license. And so that was my foot in the door in the business itself. And then fast forward next 10 years, I did a lot of specialty asset class, a lot of gas stations, a lot of businesses, small businesses, big businesses. And 10 years into my journey, Vinky, I remember this call 10 years ago where this is actually in 2014, where another friend of mine called me. He was from South India. He called me and said, "Look, I have a hotel. Can you sell my hotel? Because I know you sell gas stations." And I said, "Of course I can sell a hotel." It was
Why
the
not?
same
Right.
principle. I met with him and said, "Look, I've never sold a hotel before, full disclosure, but I've been doing
Uh-huh.
now commercial real estate for the last 10 years, and I'll figure it out." And he gave me the opportunity, and that's when I had my first hotel listing. It was a Days Inn in San Antonio, but I didn't know what I didn't know, right? I didn't know anything about the metrics of the business. You learn on the job. And so that's what I did. I learned about the hotel business while marketing it, while introducing that hotel to other brokers, other owners. And I was able to bring in a 1031 buyer who purchased the hotel in I think 3 months time frame. And that's how I entered into the business, into the hotel world about 11 years ago. So since 11 years, I've been basically just trading hotels, because one thing I found, I know it's a long answer, but one thing I found was that hotels were generally a higher ticket item than what I was used to, which was a lot of specialty retail, gas stations, stuff like that. And so I made more money. It was an aha moment for me from a brokerage standpoint, that I have to do same amount of effort, but I can make more money to take home. And that's when I started focusing on the on the hospitality side. And since then, I've been trading a lot of hotels. So that was my entry into the hotel brokerage world. And then about 6 years ago, my brother and we put our portfolio together of the single family homes and some other commercial real estate that we had. And we combined our portfolio together and got into the syndication world. We bought our own properties, flipped them, made money, and then our friends and family started asking what we were doing. And so then we started looking at the syndication model. We started applying that. And so 6 years later, we're in 17 different properties, in 4 different states. And so that's what we've been doing on the syndication side. But I didn't want to compete with my clients on the hospitality side. So primarily our focus on syndication was multifamily. multifamily is an asset class which you and I both understand. It's a need that everybody has. Housing is a real need that everybody has. So that's what we had been focused on until about last year when we got into the hospitality world. So we syndicated 2 hotels last year and this year, and we're moving beyond looking at other deals right now.
Ooh, that's a quite a story, quite a journey. So let's go back.
Yeah.
You have shared so many golden nuggets throughout. So we're gonna dig a little bit deeper in your journey now. So let's go back, way back. I think it's around 16 years back when you started, or maybe longer, right?
Mhm.
The first gas station deal. So let's talk about that. 2 weeks into the licensing, you
Yeah.
got your broker license, and 2 weeks later, you got this listing. So
Right.
how did that go? What was going on in your mind? Because most people, they'll get cold feet. Like, I do not know anything. I didn't even sell a home even, and I'm selling a gas station. So
Right.
I want to understand what was going on in your mind and what was the mind shift right there, that how I'm going to underwrite this property or how quickly I'm going to learn, which you did. So
Yeah.
take us through that journey. What was that
Yeah,
like?
yeah, great question. So, I'm a believer of obviously education, but I also believe in risk. I believe
Mhm.
that sometimes you become too comfortable doing what you
Right.
do,
More risk, more
and
reward.
so we don't live in a box. We want to stay out of it, and as opportunities come in. So when I got that call. Before my real estate world, I used to be in another business where, as a
Mhm.
business owner, you've always learned that you don't say no to an opportunity. And so that call that I got, where he asked me that if I can sell gas station, of course, automatically the answer came, yes, of course I can sell it, because it was a challenge. It was something that I wanted to learn, but I had no idea what it was. But so that's when I met the person. I spoke to him and I understood the business, how they were operating. And I knew that there were other people who had similar businesses. And so for me, it was just a fact that I had to put one on one, 1 plus 1 together, because I knew that here there's a need, there was a challenge that somebody had. They wanted to sell their business. And I knew so many people in the business who already own similar type of businesses. All I had to do was match that, right? And so automatically from me, I started looking at not only the application of where to market it, but also who to market it to. And so, a lot of times I see in the brokerage world where agents just put a listing out there on LoopNet and then pray to see that, they're
I
going to
hope,
actually get
hope
a
that.
the hope. And hope is not a strategy, right? As you and I know, we have to go beyond. And so for me, I remember that first listing that I got. Not only did I learn what LoopNet was, because I didn't know anything, right? I mean, I had just gotten into the business, but also at the same time, I started randomly calling people saying, "Hey, I know that you have a gas station, or your friend has a gas station. I have another opportunity. You guys want to take a look at it, right?" And so I just started bridging that gap. And so I feel like it's important for us to just have that leap of faith and stretch yourself just to get to the other side. And so yeah, it was a positive outcome for me, but it was because of the belief that where there's risk, there's reward at the same time.
Yeah, you said two good things. You said leap of faith and stretch yourself. And also you mentioned thinking outside the box, which were you were doing all these things. So which is pretty amazing. So now let's fast forward a little bit, right? 10 years down the road, you got another opportunity now, right?
Mhm.
So I heard this growing up in India. I'm from India, by the way,
Yeah.
so grew up in a very spiritual culture. I have I would say certain qualities or certain traits kind of embedded in my DNA, right? Because it's our upbringing, like we were talking
Hmm.
before the recording, our upbringing or our traditional values, we think certain way. So when the second opportunity came to you, the hotel opportunity, again, brand new asset class, you aced at selling gas
Hmm.
stations. So
Hmm.
now moving on to new asset class, and then you thought, oh, what could be wrong in doing that or how hard that could be, right?
Hmm.
So what was going on in your mindset at that time compared to 10 years ago, right? You were
Yeah.
brand new. Here you had tons of experience, tons of transferable skills, and you thought, oh, cinch, I can do it just like that. So
Right.
take us through that journey.
Yeah. So Vinky, when I got that call, it was exciting. It was exciting because it was something. Once again, it was something new that I had never done before.
Mhm.
But I also knew that the price point was 3 times what I was used to selling on the other asset classes. So,
Mhm.
and not that I was greedy, and not that I wanted to just think about commission itself, but I was thinking about learning a new asset class, right? And it fell in my lap. And so it fell in my lap. I took the opportunity to just go right through it. And I just said, look, Mr. Matthew, I will learn the business, give me so many weeks and I will perfect it. And started asking lots of questions. But then also it was just the belief in myself, right? The belief in that positive environment and the positive thinking that, there's nothing I can't do. And so it's that level of sort of confidence that I already had in the business itself. And the upbringing that you're talking about, it's the same thing. You dive in first and then you think, are you going to swim or not? Right. But you don't have a choice. You swim or you die. And so for me, it was the same thing. I got the listing. I already at that point knew what commercial real estate was. So it wasn't as much of a challenge. But I started once again digging deep in and asking questions because I wanted to understand the metrics behind it, the numbers behind it. Once again, so many people get into this business, especially also in the brokerage business. And if you don't understand the business behind it, how are you able to market it? How are you able to talk to other people regarding the opportunity? So I started asking questions. I was just lucky enough that the seller that that I knew was able to answer a lot of those questions for me. And so the seller believed in me, and therefore we were able to market that property and bring it to the next buyer.
Oh, thank you so much for sharing that. You mentioned something really good over here. You mentioned, you need to learn the intricacy of the business in order for you to understand the business fully and make it kind of workable for you. And then you think about scaling afterwards. So share with us some of your learnings once you started first, 16 years back or 17
Mhm.
years back,
Mhm.
and now, because now everything seems like piece of cake for you, right? You're jumping to multiple asset classes. I know you're in multifamily, you did industrial,
Mhm.
hospitality, and might have done multiple more too, or maybe land deals too.
Mhm.
That's how much I know. So I
Yeah.
wanted to hear about your mindset now. Then we'll go into our hospitality asset class after that.
Sure, sure. So that is it. The mindset is that you got to be a lifelong learner,
Mm-hmm.
and
100%.
because when you're learning, you're growing, and when you're growing, you're hopefully making a difference, right? And that
Mhm.
difference is not just within you and your family, but also hopefully in whoever you're interacting with, and that is very, very important. And so that's what it is. I mean, with learning about the hospitality business, now what we're doing is I'm the hospitality division leader for KW Commercial, where I'm at right now on the brokerage side. Well, there we are doing masterminds. We're doing these deep dive courses in the hospitality world, where now we're teaching this to other agents, so the other agents can hopefully learn and apply this skill set, into their world. And so that comes with the passion of just education and the passion of serving and teaching. And because when you grow a community, you see a difference. You see a difference in hopefully yourself also. So with the hospitality world, when I started learning about what an ADR is, what a RevPAR is, how does the RevPAR grow, what does a STAR report looks like. Once you have that knowledge and once you see what the seller is going through, you're able to now talk to the buyer and show them the differences and show them the opportunities that exist maybe for them to take the business to the next level. I think that all started happening when I started getting into the hospitality world. And so fast forward now, where we're now syndicating these hospitality projects for our spur equity for our company, as well as bringing passive investors into the deal. Now we are sharing this knowledge with our passive investors, hopefully who are only just were focused on the multifamily world for the last maybe 5 to 10 years. Multifamily properties, that asset class has been on the top. And with the shift that has happened, as you and I know, and that shift is real, where we have to now look at other ways of purchasing these properties and bringing that to our investors and making sure that our investors are safeguarding the returns that they need to get.
I know. That's why bringing in this Go Beyond Multifamily conference in
Mhm.
June. June
Hmm.
6th and 7th. I think you're one of our feature speaker there too on hospitality
Right.
because we wanted bring this awareness to our database, to our community, or multiple other communities who are joining hands with us to share with them there's multiple asset classes in real estate, not just multifamily. So let's
Correct.
go back to your story. You started as a flipper, right? As a broker, flipper, and then you got into multifamily, which you did very successfully. Now you're doing hospitality. So let me ask you this question. Are you doing your deals too, as well as your capital allocator? Because I understand then you guys do some capital allocation as well, right?
Correct. So now we are strictly just acting as fund managers.
I see.
And so we are raising capital for different deals of different sponsors. But one of the differences that we have is that we are partnering with a few operators in either it's in the Phoenix market or it's here back in my backyard, which is in Texas, where we're partnering with them and we're bringing half the capital that Spur Equity is bringing and half the capital that the sponsor is bringing, and so that's what we're doing. So this way, we're actually partners in the project itself. And then we're also opening it up to our investors. And so, like for instance, the Phoenix projects that we did, well, we're the main sponsors with our partners who are boots on ground. With the hotels that we're purchasing, we're the main sponsors with our partners who are boots on ground. So they are the ones who are focused on the management side of it. I joke around to people and I tell people I'm lazy. I don't, I don't want to manage or asset manage anything, but we're on top of things because we're working with our partners who have the capability, who have the skills, who have the manpower, and the team behind it, where they can actually really focus on management and asset management at the highest level. And then, of course, we're part of the deal itself. We're actually partners in it. So then we're on every single asset call with them just to make sure that the ship is going in the right direction. But we're not doing the day-to-day work on it.
That's true. I agree with you 100%. I'm on the same boat too because you wanted to work with experts and it's a team sport anyways. It's not a one-man show because one person can do only so much and then you're going to be dropping balls here, there, which is not going to be a good scenario. It's always a good idea to team up with the industry experts and take the deals down. So I'm going to ask you one question on the hospitality. I think
Mhm.
you started post-COVID. So the question comes to my mind is, how has the hospitality sector evolved post-COVID, and what trends are you are seeing, or what trends should investor be watching?
Yeah, great question. Hospitality world is very cyclical.
Hmm.
It reacts faster to the economic changes that are happening around you. So
Hmm.
when COVID happened, of course, everything stopped, as we know, right? And
Hmm.
this is the unique thing that happened in not just America, but also the rest of the world.
Globally.
And
Hmm.
as that COVID, as life came back into being again, and people started moving again, what we saw is we saw a hockey stick that happened in terms of just this asset class itself, where everybody they were stuck in their houses for about a year or so, they all wanted to travel, and so
Hmm.
we called it revenge travel. People just started going everywhere. But the unique part of it also was that people who were working in the business itself, now the business went mobile, and so you had Zoom that came into being. You and I are Zooming right now. This probably didn't happen 6 7 years ago. This is big, thanks to COVID, thanks to technology, thanks to just different things that the alignment came through. So there are people who started working while staying at home, and so you're seeing a lot of that, even that's going on till today. So what happened, in one of the unique things, is that not only did the hospitality business go up because of travel, because of people taking leisure travels, people just going around and seeing different things and experiencing different things, but people stayed longer in the hotels. So the extended stay hospitality became a thing, and so we have a lot of hotel companies like Marriott and Hilton and Wyndham and Choice. All these big companies started coming up with more extended stay flags. An extended stay flag basically is a hotel that has a kitchen component to it. So now you have basically a mini apartment but it's a hotel, so you can stay longer. So if you and I are working, and let's say we're working for a tech company, and we all we need in our work is a computer. So essentially, I can go to Grand Canyon and I can stay out in the wilderness and I can enjoy what's happening there while still being plugged in and working. So I'm working in the daytime, but I'm enjoying the rest of the day or the rest of the evening wherever I'm at. And so we started seeing the extended stay segment of the hospitality business started going up and up, and now we're seeing that segment of the business as a true leader in the business itself. So a lot of trends changed, and now what we've seen in the last 2 years is that just like in the multifamily world where we have challenges in the hospitality world also, as the debt went up, as the interest rates started going up, we started seeing a slowdown in the business itself. But that's not a phenomena just in the hotel world. That's just a phenomena in the business world that happened. But
Overall.
yeah, but I'm really excited about the fact that it's a buying opportunity for buyers right now, just because as 50% of the people are not transacting, and so people who are able to get those deals or make those deals, we will see because of inflation and because of just expenses going higher, that the hospitality world will start going back up again. So the trends that we're seeing in the market right now, in the later part of 2026 and beyond, we will see that that segment of the hospitality world will thrive again. And so as long as you can get into something right now and you can sustain yourself, I think beyond 2025, you're gonna be thriving.
Hmm. Interesting. So, but how about Airbnb? How is Airbnb playing out? Because it's like a number one competitor for the hotels, because I see a lot of people opting in for Airbnb versus hotels these days. They feel
Yeah,
like okay, they have more space, and the Airbnbs are like really nice too these days.
absolutely.
Would you like to comment on that?
Yeah, sure. I mean, all I would say there is that it once again depends upon the segment that you're in.
Hmm.
And so, of course, on the personal leisure sector, you're going to have competitors, including Airbnb and other companies, where people
Hmm.
will have that choice. But that's a segment of the overall hospitality class. A lot of hotels, government uses hotels, a lot of businesses uses hotels, so a lot of different companies and different segments use the hospitality world. And so if you are in the going to a conference, or if you're going to have a company meeting, you need more amenities than having small houses to stay in. And so what we are seeing is that Airbnb definitely has taken some
And
share
jump
overall,
out.
if you look at it. But if you look at it in totality, it's a very minimal part of the business itself. We're still seeing banks funding deals. We're still seeing different sponsors and different hotel companies and different just hotel owners building more hotels. Of course, with that, it's a challenge right now, just like anything else. But
Mhm.
Airbnb is playing a very small role at this point, in terms of competition with the hospitality world.
Okay, so let me ask you this. What type of investor is best suited for hotel investments?
So hotel investor, I see two different classes, right? I see an investor who's a mom and pop operator. Maybe they own one or two or three hotels. They're operating themselves. They're this small company like that. And then we go beyond and we see on the corporate level, we see hotel investors that own multiple properties, and we're talking about 10, 20, 30, 40 properties, a lot of REITs. What they do is they manage those properties with a management company. They're not managing them themselves. So just like in the multifamily world, you have a third party management company, you can also hire a third party management company on the hospitality side. So
Mhm.
we're seeing that shift. And as you and I both are from originally from India, and we know a lot of people who came from that part of the world, and maybe they bought these roadside hotels 20, 30, 40 years ago, and these were small hotels. Well, their kids and the second generation, or maybe the third generation, they've sort of legitimized the business. And these are the folks now, they have 10, 20, 30 hotels under them. They're doing sort of mini syndication with their friends and family. And they don't call it obviously syndication, they're partnerships, which is also just a fancy word, right? Anyways, it is a syndication, or a syndication is a partnership. And so these guys have sort of legitimized the business. They've opened up smaller management companies just to manage their own businesses, their own properties. So we're seeing that segment that came long time ago. Now their second, third generation is getting into more units.
Mhm.
And then we're seeing the bigger class, the REITs and the corporate class, that basically they're hiring the third party management companies to manage those properties.
That's a good point that you brought up, the property management or the operational management, I would say, for the hotels. So the question comes to my mind is, this is going to be more like versus a reward, like you were
Mhm.
talking earlier, that your risk appetite is bigger, or you like to take risk, you're a risk taker. But a lot of people are not like that. So hospitality often carries more operational risk.
Correct.
How do you evaluate and manage that risk when syndicating a deal?
Yeah, so I think it's a great question. With that, the way we have managed it, I can just talk about myself, right? So the way
Mhm.
we've managed this is that we've partnered with hotel groups that own more hotels, the other hotels. So that's just that first class that I was talking about, the folks that have sort of graduated into 5, 10, 15 different hotel groups. So we have partnered with groups that own their own properties, that have their own management companies, but so they're not just owners, they're now also partners with us. So for me to buy a Marriott and then hire a third party management operational company to manage that business for me, their trajectory and their mindset is going to be that we're going to grow just the revenue so that we can get money, our fee based on revenue. But by
Mhm.
us partnering with our partners who are not just owners but not of their own properties, but now they're actually owners with us, partners with us, having their own management company, their mindset and their growth is not just growing the revenue but also decreasing the expenses. All right,
Mhm.
because now they're owners in the property itself. And so for them to decrease the expenses, at the end of the day, the net income, whatever's left over, they make more and we make more at the same time. So we're mitigating that by saying, look, we're only going to partner with people that are really, really, managing these properties on a very sort of higher class, where we can partner with them now and we can mitigate that risk. And what we're seeing, Vinky, in the hospitality world is that at this point right now, the growth is there, and it's very limited, just like it is on the multifamily side. The growth is there, but what's going on is the expenses are more than the growth. We're seeing that in a lot of different asset classes, including in the hospitality world. And so, insurance is a real thing. Property taxes are a real thing, right? And payroll is a real thing. I mean, these are all expenses in a P&L. Doesn't matter if it's multifamily or if it's hospitality. And if the ADR growth is not happening, if the RevPAR growth is not happening as robust, then we're going to see our bottom line shrink. And so with partnering with our, partners that not only manage the growth at a high level, but they also manage the risk, meaning the expenses at a very high level, we're seeing that our bottom line is much healthier than what I can see in a third party management company that's out there.
Oh, nice. That's a good strategy right there, collaborating with others who have done that
Yeah.
previously. I like that. So how about the exit strategies, because this is just like getting in and kind of maintaining the property. So what is the exit strategy for the hotels? Like somewhat like, is it similar to multifamily, or how do you structure them to benefit the investors? Because investors, they really wanted to know, how long you're going to be holding my money, or how I'm going to be tied, how long I'm
Yeah.
going to be tied to this particular investment. So
Yeah.
until unless there's a clarity, a lot of people hesitate to take the
Mhm.
risk.
Great question again. And so it comes down to the business plan, right? For us, we bought two brand new Marriotts that just were built. We took the risk out because the developer took that risk. And in today's market and in the last 2 years, and now with tariffs in place, we're seeing that, whatever was underwritten a year and a half ago, is probably going to cost them more to actually build and deliver than what it was earlier. We took that risk out. And on the hospitality side, our value add strategy on a new property is still a value add strategy, because what we're going to do is we're going to stabilize the property and then exit. And on the exit that you're asking, it's a great question. We actually have more exit strategies and more, there's more creativity built into hospitality than, let's say, multifamily sector. And the reason for that is because, hotels, you can change the flag, right? And if you change the flag, and of course, renovation comes with it, because every single flag is going to have their own product improvement plans, which are called PIPs. And so as you do the PIPs, you can change the name and the flag itself. Well, each flag has its own ADR that
Gotcha.
comes with it, meaning that, if I have a Best Western and I change the Best Western into a Fairfield as an example, now my ADR could go from $80 to maybe $110, right? And that $30 growth times 100 rooms times 30 days times 12 months, that's a lot of growth that you can see, right? And so by changing the flag, you can have a different exit strategy there, or by making it independent. What if there's no flag there? And so if there's a current flag right there and you have expenses that you have to pay, you have to share the revenue with the company itself. But by making it independent, if you're a really good operator, you can save on that. And that's an expense that you can save on. And so you can grow the NOI. By growing the NOI, of course, you can grow the value of the property. Those are just two things. But other things is, we're seeing a lot of conversion happening into multifamily right now. So the older boxes, the older hospitality properties, and we have two under contract right now on the brokerage side that we're selling to a multifamily group. So it's an extended stay property, and an extended stay hotel property already has kitchens in place. And so the plumbing is there, everything is there. Now they just have to work with the cities and the municipalities, of the area itself to change the zoning and make sure either enough parking is available or parking variances they can get from the city itself. As long as they can do that, they can convert from a hotel into a multifamily, right? So that's another strategy that they have from an exit standpoint. And then, you can get into student housing, you can get into just different types of housing. Housing controls everything in America, right? We need to have housing available. And
That's
so
true.
that box can go from a hotel into something else. So there's a lot more creative strategies that we're finding in the hospitality world than pretty much any other asset class that's there right now.
So one question, then I think we're gonna end it because we're over time already. You
Okay.
mentioned multiple times ADR, that's the average daily rate that we take for any hotel or any hospitality industry, because it's just like how many bookings are there or how many people checked in that day, kind of that's the average daily rate right
Right.
there. So what is that average daily rate based off of? Because you mentioned if you change the flag, your average daily rate or ADR changes. Right?
Hmm.
I feel like, okay, there's could be something like franchise fee, right? The more you're gonna go up in the tier, price is gonna be more, and the daily average rate fluctuates according to that. But if you just go kind of freelancer, there's no franchise fee or anything like that. I'm just using that terminology. There could be
Hmm.
something else that you call. And then there might not be any fees, and then you can determine your own ADR basically, right?
Yes.
So if you can just clarify for our listeners that.
Good question again. ADR is exactly what you said, average daily rate. And average daily rate, there's no formula or magic behind it. Average daily rate changes based on what's happening in your market, right? And that's the beauty of a hospitality investment versus multifamily investment. ADR, can change based on what's happening in your backyard. If I have a game happening, if there's a basketball game happening, or if there's competition that's going on, there's soccer world's going to blow up, some of these areas in the US right now. Fort Worth is going to see an amazing growth just because of the amount of people that are going to be there. And so an average person who is charging, let's say as an example, $100 per room, right, as an average daily rate. Well, all of a sudden next day, they can charge two, three, $400 per room based on competition. But if you were in the multifamily investment and you already have a tenant in place for a whole year, you can't do that. Maybe your growth is going to be 2, 3, 4% a year that year, versus in the hospitality world, you can go up 20, 30, 40% in terms of growth based on what's happening in your backyard. So there is no magic formula for ADR. It's whatever you feel it is. So if you're deflagging a property and you have no flag, on top of that, you're amenitizing it such nicely where now you're making it a boutique that feel itself. And you
Mhm.
believe it or not, there's people, there's companies out there, there's businesses out there that actually charge much higher because it's a boutique. It has a special feel to it, and therefore you can charge much higher price for it. And so not only are you paying a franchise fee because you're not, on top of that you're making more. And so in our world, the balance happens between the ADR as well as the occupancy. You want to make sure that you don't advertise so much more than your competitor does, where then your occupancy goes down because nobody's coming to your property. While on the other hand, you don't want 100% occupancy, knowing that your competitors are charging much, much higher than what you're charging, right? So the balance of occupancy and a balance of ADR is what we call in our world a RevPAR, which is called revenue per available room. And a hotel operator's job and the hotel company's job as a management job is to basically make sure that the RevPAR in that market is as high as possible. That will make sure that your ADR is high as well as your occupancy is high. So the relationship of that is called the RevPAR. So when we track when we were talking earlier about metrics of the business itself, we're tracking how the RevPAR is in your hotel versus in your market. And so when investors are calling me, or when we as buyers who want to syndicate a property, I'm looking at, let's say, Texas, since I'm based out of Texas. I want to see which are the markets that in Texas that have the highest RevPAR, because I know that that market is charging the highest ADR as well as the occupancy is high. So they're making more money in that market. And so by me knowing that, I can basically scan that market and see if there's anything available for me to buy.
Interesting. Oh my God. I love your journey and I love all the knowledge. I really appreciate you being such a powerhouse of knowledge. I would
Thank you.
like to ask you, I know we are over time, but I'm going to ask you, share with us one golden nugget that made you strive through all this time. Share that with my audience. Anything, it could be mindset, could be anything that worked for you.
Sure. So, to me, it really comes down to knowledge. I mean, it comes down to is that for us, we have to be constant learners. We talk about that all the time. That
Fingers right.
the golden nuggets that you were talking about. Even in this conversation, we're learning from each other. Knowledge is power. And I talk about this in my world and in our syndication company all the time. But the action of it, that's the superpower that you have, that you can't just sit on knowledge. You have to apply that knowledge somewhere. And so that's really what I talked, and that's something that I talk to my kids about all the time, is that we have to be learning, but then we have to be applying that learning in our normal world, at our homes, at our work, at our schools, and at our businesses at the same time.
I know. I remember when we were little kids, I don't know, my parents used to say that, maybe your parents did too. Like you can bring the water to somebody, but you cannot make them drink,
That's
right?
right. That's right. Absolutely. Absolutely.
So this brings us to a rapid fire round. I'm going to ask you 5 questions. So you're going to answer it in one word or one sentence only. Are you ready?
Okay. Okay. I guess I'm ready.
All right. So the first question is, what is one of the most important thing you have learned in your life, and how did your life change after learning it?
Um, I think just be humble. Be humble. Know that other people know more than you do, and come from contribution, come from learning, and so as you do that, you grow.
I love that. I love that answer, being humble. I think that's something is installed in us, I would say, because coming from the similar background. So
Yes.
share one good book that you would like to recommend to my audience, other than
Um,
Rich Poor
yeah.
Dad.
Oh gosh, there's so many books out there, Vinki, that I'm always listening to. But the one that comes down to me is because I believe in less is more, is the one thing. It's actually written by Gary Keller, who's part of, he's the founder of Keller Williams. But the book is not about real estate. The book is about just your personal environment and personal learnings, that just focus on the one, whatever that is, and learn from it. Because, we believe in, doing multiple things at multiple times, and it's not efficient. And so really the power of zero, of the power of one, is really what it matters. So the one thing is the book that I would recommend to everybody.
Yeah, that's a good one. In one word, what does life mean to you?
Happiness, passion.
I like that. This brings to my next question. That's kind of similar too. So, what is your biggest passion?
Um, Biggest passion would be is just contributing to the society, however that is in your own personal word, but contribution.
I like that. Make that difference, right? That's what life all about.
Right,
Touching other lives around us in a
right,
meaningful way. That's what we
right.
love to do. If you could turn back in time and talk to your younger self, what would you tell yourself and why?
um I guess I would say, listen to your heart more, listen to your passion, be passionful, listen to your voice, listen to your inner voice more. Sometimes we're just trained to think about what the book says or what somebody else said. But, listening to your inner self will always lead, hopefully, to the right decision that you're going to make in life.
I like that because when you're listening to somebody else or trying to imitate the book, whatever you read, you're trying to live somebody else's
Else
life,
is correct.
not your own life.
Right.
So listening to yourself or turning inwards and figuring out who you are, then doing things, most of the time you're gonna be on the right path. I love that. But the thing is,
Mhm.
this wisdom comes with age. Wish
Yeah.
we knew that when 20 years back, right?
Well, that's okay. You always constantly learn, right? And so,
That's
but you're
true.
right. You're right.
So how can people reach out to you?
So people can reach out to me at spurequity.com. I'm always on Instagram. I'm on LinkedIn more than Instagram, and also Facebook. But easy enough is just spur, SPUR, equity.com.
Thank you so much, Rav. I really enjoyed our conversation. Let's have you back one time again because there's multiple more questions
Mhm.
that we were short on time.
Sure,
Thank you.
absolutely. Thank you for having me, Mickey.
Thanks for tuning in to the Wealth Vibe Show. If you enjoyed the episode, be sure to subscribe and leave us a 5-star review. And don't forget your free gift. Download the Busy Professional's Guide to Real Estate Investing at loombainvest.com. See you next time with another amazing guest and another powerful conversation.